everyone who have gathered here, esteemed guests, professors, scholars, and students. We cordially welcome you all for the most awaited event of the department, Bancquest 24. Ignite the spirit of competence, the annual industry interface aimed at connecting the students, industry, and the academia. Now, I would like to invite the Honorable Vice Chancellor, Dean, School of Management, the Chief Guest, Dr. Tirthankar Patnaik, and Shri Joseph Amilanji, and the invited guests to accompany on the stage.
This is a platform for us to exchange ideas and knowledge as contemporary development in banking, finance, and technology. We, the students of banking technology, Ashwini, Chanchal, Shrishtika, and Keshav, present before you as a host of the inaugural session of this meet. It is indeed a golden opportunity for each one of us to enrich and enlighten ourselves. Without further ado, let us dive into our promising schedules.
Light is the divinity of life, and it shows us the right direction. This traditional lamp holds a profound significance in our culture, symbolizing light and prosperity.
With this noble saying, I take the privilege of requesting our honorable dignitaries to come forward and bring this most awaited event by lighting the lamp. With great pleasure, I would like to welcome Dr. Mariappan Sir, our beloved head of the Department of Banking Technology. He has proven track records of fostering innovation, collaboration, and academic success among both faculty and students. Please join me, sir, in welcoming Dr. Mariappan as our guide in shaping the future of banking technology to give the welcome address.
Distinguished guests, invited speakers, professors, my dear colleagues and students, very warm welcome to all of you. I feel greatly pleasure in welcoming you all. I would like to extend my special warm welcome to all the distinguished guests who are gathered here, have traveled a long distance to make our program a grand success. The Department of Banking Technology, generally known as DBT, started in the year 2006 to start and offer an innovative MBA banking technology program. And in 2009, we started our research program, PhD in banking technology and computer science and engineering. Later in 2009, taking into account the explosion of technology into the financial field, we started MBA Financial Technology, and later, closely observing the development taking place again, the technology explosion into management and other disciplines. We this year propose to start a 5-year integrated MBA, BTech MBA program with the CSBS, Computer Science and Engineering, and this is what we have planned for this particular year. The idea of Bancquest started since beginning of the department, basically to connect the students and the industry. We call it as in management backward integration and forward integration. One side to connect the students to the industry for possible placement. The other side is to find out the best of the lot of the students to undergo this program. On this great occasion, I feel greatly pleasure in welcoming our distinguished guests who are present here. First of all, I would like to welcome our Vice Chancellor, Professor Tarani Karasu, a great leader, a visionary who leads by example. He stood with us at the Department of Banking Technology in all its difficult times. He is a progressive thinker, try to resolve the issues as and when it arises in the campus. He is also a personality who adopts and believes in out-of-box thinking. So many of the issues, many of the problems, he approaches with the out-of-box thinking, and he created a very conducive atmosphere in the recent times for all the stakeholders in the campus. One of the important example is when we proposed a 5-year integrated BTech MBA program. It is the first of its kind. Only few institutions, IITs, are offering this course. There were a lot of questions how a management department under School of Management this can be offered. But he stood with us, and finally this program is going to be launched from this year onwards. The university experienced significant growth with its lot of progressive initiative, and we will continue to grow under your leadership, sir. Thank you for accepting our invitation and being part of this function. Thank you, sir. Moving on, our Dean, School of Management, Madam Malavika Dio, is a great mentor, is a great motivator, leading the school with a lot of positive vibration, proactive approach, has been an inspiration to all of us in all the departments' initiatives so far and the future initiatives. We have a lot of ambition to grow further. We don't want to limit as a department. We have a ambition to grow as a school in the future, taking advantage of the technology explosion happening and the expansion of management discipline, expanding to various large scale expansion. Therefore, Madam has been standing with us in all the positive initiatives of the department. Madam, thank you very much for accepting our invitation and gracing this occasion. Welcome you, Madam. Then coming back to our chief guest, he comes from one of the topmost professional institution of India, who helps the economic growth, accelerate the economic growth in this country. So National Stock Exchange is the chief economist. You can assume, you can imagine, dear students, how much of a foresighted thinking is required for a chief economist to put such a large institution on roll and to continue to succeed. You all will be watching the stock movements in the recent times. So he is one of the pillar for initiating the proactive approaches of the National Stock Exchange. He is a great economist associated with a number of corporate and industry projects, strong econometrics as well as a financial analyst, and he is with us. Sir, thank you very much. You have traveled along and you made us feel very happy and proud on this occasion, and thank you for accepting our invitation, being with us. Another distinguished guest from Reserve Bank of India, you know, the another important pillar of Indian economy, who regulates and provides guidance for the banking sector in India. When the world was crumbling in many times due to financial crisis, but Indian economy stood very strong without much scratch on its sides. So that is because of the approach of the Reserve Bank of India with regard to policy initiative, proactive approach, and also futuristic thinking. Even with regard to digital currency, when there is a lot of debates going on, the Reserve Bank of India took a very firm stand on that. So we have a guest, Sri Joseph Amalan, Deputy General Manager, Reserve Bank of India, Regional Office, Chennai. He is a specialist. See, running a bank, the most important challenge in running a bank is supervision and evaluation of the bank and making the bank very strong and vibrant so that the system don't get collapsed. Now he comes from a very strong background of supervision of banks in India. Sir, thank you very much for accepting our invitation, being part of this function. We feel greatly honored with your presence. Moving on further, I also feel very happy, delighted to welcome all other speakers who are present here of the dais. Professor from Indian Institute of Management, Visakhapatnam, Jaisula sir, thank you very much. He will be the speaker in the afternoon session. My good friend, Dr. Amaresh Samantaraya, my good friend, Dr. Sambat, Madam Computer Science, Madam from Computer Science, and other members of faculty who are all present here to grace this function, accepting our invitation to be here. And I also have to mention the two pillars of today's function, the coordinator of our Bancquest, Dr. Prabhu and Dr. Geeta, who made this arrangement tirelessly and made us to sit very comfortably on this occasion. And it would not be fitting if I don't mention the contribution of our students and scholars who are all dressed very well today, and we wanted to give, so far Vice Chancellor may be thinking why he has arranged when we have a lot of facility in the university, a bigger auditorium and all facilities are there. Sir, we just wanted to give a corporate feel for our students because they have been coming to the campus every day and day out, day in and day out. But we wanted to give them at least 2 days the feel of a corporate experience coming to a place like this and listen to the various deliberations going on in a different atmosphere, in different environment. Otherwise, that others used to be a very routine place. So that is the intention. We have arranged it here, and thank you the university administration for supporting us financially, and Professor Sridhar is also joined with us. So in this occasion, I think this this Bancquest would not have been possible without the contribution of the students from MBA Banking Technology, Financial Technology, and the research scholars. But one important thing, we have tried to arrange a feast, not only, this is for the students, not only for your tongue, but also for your ears for the next 2 days. Right? So for the next 2 days, don't hear, go beyond, listen. Don't stop there, go beyond, understand whatever the deliberations are going to be here. And don't stop there, go beyond, internalize. And don't stop there, go beyond, implement. So with this few words, I would like to thank each and every one of you. I also would like to thank the people from Media Center who are here to support us. Thank you very much.
Thank you for your inspiring welcome address, sir. We look forward to your continued guidance in shaping the department. On behalf of the Department of Banking Technology, it is a pleasure to invite Dr. Geeta, who is a faculty coordinator of Bancquest 24 and played a pivotal role in organizing the meet to enlighten us on the event scope and schedule. Please join me in welcoming Dr. Geeta.
Good morning to everyone present here. I feel very honored to stand before you all as a coordinator of Bancquest 24, and I'm just going to brief you about the scope of the Bancquest 24. You all know that Bancquest is an industry interface meet which is regularly conducted every year to connect the students with the industry people coming from banking, finance and technology background. So there are many departments, but banking technology, I think this is the first department in India which developed an interdisciplinary course which combines finance, banking and technology. So this is an proactive thought which was developed by our founders of this department, and this gives a very successful growth for our new education policy also. So under this, every year we work with the theme for the Bancquest program. So this year, considering the government's Vikshit Bharat vision, we have made our theme to be Vikshit Bharat 2047 and the role of banking and fintech in the country. So under this, we have arranged for different expert talks and 2 panel discussion which is going to give you knowledge about what are the emerging trends that is needed for the banking, financial sectors and the technology background which supports to make this finance and banking sectors into a next level for the economic growth of our country. So everywhere when we go to reach the vision of the Vikshit Bharat, surely banking and fintech will play a great role. So if technology is added to this, it gives an immense and matured platform to improve our nation to a better next level. So keeping in this mind, we have arranged some 6 expert talks combining roles of banking, finance and technology and 2 panel discussions. One panel discussion will be supporting the banking and fintechs, and we have 3 panel members coming from banking sectors like SBI, Canara Bank and Indian Overseas Bank. They will be discussing about the role of banking and fintech for the Vikshit Bharat vision. And the next day panel discussion, considering when we go for technological background, security plays a major role. So due to this, we have considered to give away a cyber security panel discussion which will create insights for our students to concentrate on the security platform to support the technological growth of our vision. So other than that, we have talks on the economic growth, capital markets and then blockchain technology. All these things is going to be carried out. This 2 days will be a very knowledgeful session. So each session has different perspective. I request all the students to ask questions and to go on with further proceedings that will make all together this success a very good and thought-provoking one. Thank you everyone.
Gratitude is one of the greatest human virtues, and it is an expression of our recognition to the contribution and sacrifice. It is our duty to express our sincere gratitude to our distinguished guests by honoring them. May I now request our Dean, School of Management, Pondicherry University, Professor Malvika Dio, to honor our respectable, Honorable Vice Chancellor, Professor K. Tarnikarasu.
School of Management, the proud of Pondicherry University, is one of the oldest and largest school and grown over the years consistently. It has over 2,000 students, enrolled about 15 postgraduate and doctoral programs. In the recent years, it has seen a phenomenal growth in terms of academic excellence, research expansion, and introduced innovative interdisciplinary programs as per new Education Policy 2020 guidelines, under the leadership of our dynamic Dean and mentor, Professor Malvika Deo.
She is one of the few professors who have grown along with the university since its inception and contributed immensely in the field of finance and commerce. Her research contribution and quality to publication is the testimony for her academic proofs. She was also served as the finance officer in charge at Pondicherry, besides member of various academic and administrative committees in the university and outside. It is our great pleasure to have such a leader in our school with us. I am pleased to welcome Dr. Beloved Dean Professor Malvika Dio to deliver the presidential address.
A very good morning to all present here. Respected dignitaries on the dais, respected Vice Chancellor Professor Dhanni Karsu, our guests, Dr. Tirthankar Patnaik, Chief Economist, NSE, the keynote speaker, Sri Joseph, DGM RBI, my colleague, Head of the Department, Professor Mariappan, and the faculty colleagues, Dr. Geeta and Dr. Prabhu, my colleagues from School of Management, School of Computer Science, guests, students, scholars, media, and all rest present here. It's quite heartening to address the gathering leading the School of Management in this August occasion. Though the Department of Banking Technology is the youngest department in the School of Management, but it is upscaling itself time and again, and it's able to prove its mantle with which it had started. It had started as an innovative program supported by UGC, and I feel nostalgic when I talk of the birth of Department of Banking Technology. This department started with the collaboration of the Department of Commerce, because those days the School of Management was only the Department of Management Studies, and Commerce Department was specializing in finance and banking, and the Computer Science Department as well as the Commerce Department were neighbors side by side, and it started in those days by taking the expertise from Department of Commerce as well as Department of Computer Science, and this innovative program was ventured, and one of the faculty from Department of Commerce was deputed to the Department of Banking Technology, and who headed till his retirement the Department of Banking Technology almost. And we used to be the teachers. We used to teach in the Banking Technology Department when it was housed in the Directorate of Distance Education, first floor. Gone are those days when the Department of Banking Technology was surviving by borrowing faculty from all other management departments as well as Department of Commerce and Computer Science. Now it has grown leaps and bounds. As I told you, it had started as an innovative course. Still it remains to make itself or to prove itself as an innovative program. As the banking, as the finance is the life and blood, and banking remains to be the artery which takes good blood to the whole body, taking out the bad blood and spreading the good blood to the whole body to make it function the best. So the banking is the structure which keeps the whole economy to breathe, to be alive. And with the technology advancement, the banking has completely transformed. The oxygenated blood goes fast into the body to make the body more energetic, more vibrant, and to contribute towards the development of the economy, growth of the economy. The stagnated growth or the slow growth has been fueled by the technology interventions in the system, and the dream of making India a Viksit Bharat by 47 is definitely going to be a reality with the vibrant banking structure that is working in our country. Very innovatively, we had started the banking technology. It also has taken up another course, because instead of confining into only banking, it spread to finance. Now the department has gone into taking up the MBA, that is the integration of technology as well as the business studies together. Not only banking, not only finance, the business studies as such is going to be integrated with the technology. Basically, the economy is doing well. All the projections of the Indian economy are very, very impressive. And with all these things, and as we know, India exports technology, exports brain to our countries, other countries, definitely. The country also is enriched with its best financial integration in all the sectors, more so in the financial sectors. And with this, there is a need for upscaling the talents, because it is not the technology that is important, not only introducing technology that is important, the training the human resource with the technology to handle the technology, that is also equally important. There comes the role of School of Management, there comes the role of Department of Banking Technology, where it can skill the students, it can train the students to fit themselves in this financial technology world, more so in our country. So this department is trying to upskill, reskill the students, because the students come from different background, though in a fragmented way they have idea about all this, but putting them in one go, that is the work of this department. And I am happy that the Department of Banking Technology is trying to think of how best this integration can be done. So this upskilling of the talent, that is most important for the success of this technology-oriented economy. At the same time, there is a need also to have an integrated strategy for the inclusive development, inclusive growth of the economy, of the banking sector, and technology is enabling to make it more inclusive, make it more accessible, and the success of all this depends on the agility, the awareness, the accessibility, and these type of programs make the student to think in out of box way how technology orientation can be made more accessible, more seamless, more more easy for people. Of course, the department is for School of Management, Department of Banking Technology is Gen 3. So hence, naturally, the technology orientation and technology emphasis is always there. I feel, being the students of this department, you should, because there is a need for technology savvy students, technology savvy students for all these areas, and the banking sector is just waiting with open hands for students who are being trained with all these nuances. So the world is yours. Only thing you should think of how innovative you can be. Of course, the technology has made the erased the difference between big bank, small bank, the rural bank, urban bank, the big and small. That is and differentiation between the bank, the NBFCs, the fintech, the differentiation has almost gone. Of course, the regulations, the fintech is taking a center stage or is going ahead in a very aggressive way beyond our imagination. But why it is doing that? Because the regulatory aspects are quite minimal or in the base for this fintech, whereas the banking sector is highly regulated, NBFCs to some extent or almost regulated, but fintech are yet to come to the proper regulation. Always technology, though, is a great enabler. It is also a great it makes people to be afraid of those who are not aware of it. At the same time, things becomes easy with the technology, but things also becomes too complicated with the technology. Those who do not know, when things goes wrong, they do not know where to go, what to do. That is the reason the cyber crimes or the many crimes which the most intelligent people are able to do are not able to come under the scanner as soon it happens, because those who do the crime, they are the most intelligent people. Many a times we think that those who do crimes, they are intelligent than the police. Similarly, here the cybercrime people are more intelligent than the technology, savvy people. Once it happens, they try to find out what is wrong and how it went wrong. That frightens many people. Of course, the young generation is quite comfortable, but being the banking technology students, being the fintech student, there is a need that not only you should know how it is to be integrated. Of course, you have all courses. Don't study these courses only for as a part of syllabus. Try to know how things happen, what things otherwise also can happen. That is the trump card you have. Many universities do not have this course. Many students are not aware of all these things. Hence, you are having an added edge over others. I wish all of you will take this course very seriously, because these 2 years of your studies is going to pave your way for a very, very successful career in future. I wish you all the best. I congratulate the department for every time trying to, it is not only upscaling the technological integration to the academics, it also the upscales the knowledge of the students to make them industry fit. I congratulate the department, I congratulate the efforts of all the faculty, and nevertheless, I congratulate all the students who are studying in this Department of Banking Technology as well as a FinTech. All success, and I wish good luck for this program to be very successful. Thank you very much.
I express my sincere thanks to Dr. Malvika Dev for guiding us. Thank you, ma'am.
A leader is the one who shows the way, goes the way, and knows the way. The success of any higher educational institution depends upon the visionary leadership and the leader's ability to think ahead of time, besides inspiring and initiating innovative futuristic programs and research activities that fulfills the national, societal, and students' aspirations.
We are fortunate to have such a leader with us to lead our university. University initiated many new activities in the right direction under the leadership of our present Vice Chancellor in charge, Professor Tarani Karsu, that resulted in expansion of activities in the campus besides a rejuvenated atmosphere. The university introduced diverse academic programs, including successful implementation of New Education Policy 2020.
Professor Tarani Karasu is an outstanding academician with vast experience of 24 years in teaching, research, and administration. He began his academic career as an assistant professor in the Department of Chemistry, University of Delhi in 2003. Later, he joined as professor in Pondicherry University. He was a recipient of Korea Research Foundation, Japan, Advanced Institute of Science and Technology, and JSPS Postdoc Fellowship.
Sir is an ardent researcher and published over 70 research papers, besides book chapters, and shared research resources and expertise in many national and international conferences of repute. Apart from any minor and major research projects funded by different government agencies and departments. Now, may I request our Honorable Vice Chancellor in charge, Professor K. Tarani Karsu, to deliver the inaugural address.
Good morning, everyone. Yes. So, respected Chief Guest of today, Dr. Tirthankar Patnaik, and the today's keynote speaker, Sri Joseph Amalan, and our beloved Dean, Professor Malvika Dev, and HOD of the department, Professor V. Mariappan, and some of the speakers also I could see, Professor Srinivas from IIM Visakhapatnam, and all the department faculty members, Dean, Professor Shivsatya is there, and all the students who are assembled here. Good morning, everyone. So, I think Professor Mariappan wants to give the corporate feeling. That's why he brought it here. But it's a welcome move. But still, I expect him to make our SOM as a corporate auditorium. I told him to make many corporate style, even executive program training also. He has accepted to do this. So I hope, so money is not the problem in our university. Only the thing is how we have to manage the things to do this. We are, to be precise, we are government is richer than private corporates. So we have to be more towards this to make this university more friendly to the students. So first of all, I congratulate this department for they are always proactive, and all of you know when management comes, they are the leaders. Whatever you propose, they say yes. Then they will think about how to do this, how to go about this. Same thing with when we discussed about the introduction of NEP courses. So during the meeting, still I remember who are all the HODs who want to introduce the course. The first person is Professor Mariappan. Yes, we are going ahead this. So that is the spirit of any teacher. We are here to expand the courses, give the opportunity to the students. So I am only thinking of how best we can give to the opportunity to the students. But most of the teachers, if they are not management faculties, they think about their problems. What are the problems we will face, whether our workload will increase, so how the infrastructure can be developed. These are all our problems. We should not think on those lines. By thinking this, the best quality teaching we cannot give to the students, because government is worrying about GER, gross enrollment ratio. So all central universities should support this. So in that way, I thank the department for being one of the pillar of our university, and giving guidelines or giving the leading lines to the other departments. And when it comes to the courses in banking technology, it is always challenging. So it is an interdisciplinary course. How to name this? So we had a problem with even the PhD. So in the recent academic council meeting, we have sorted out this also. By sorting out the PhD, how to name this, by sorting out this issue, we have sorted out all the interdisciplinary courses, whether it is a green energy or nanoscience, everything we sorted out with one agenda in academic council. Now on there are 2 degrees. One is basic degree, they don't have any problem in naming it. Whereas if you take the interdisciplinary courses, always there will be a problem. How to name this, how to give degree, whether it for the master course is already given, but when it comes to the PhD, how to give, all those things we have discussed here in the recent meeting. So it is also resolved. I think many people, many members were agreed on this, and it will be very useful to especially PhD scholars of banking technology. I also promised him when we was asking, sir, there is many seats vacant in this department. So he asked me, so if you give the assurance, we will definitely go for admission. So I said, definitely go ahead. I will assure you that it will be done. So in that way we have done it. I think the students will be definitely benefited out of this. So when it comes to this industry interface, so I thought of sharing some of the points which are many of you, because industrial partners are here, and the students also here, our teachers, our faculty members are here, also here. So as our dean mentioned and our HOD also mentioned, so this is the very unique department, and where they give the banking technologies, and it is directly they learn about the banking technology, and also they serve to the nation. So when it comes to the Indian banking, because bankers are here, there are many challenges for the bankers. I think the students also should know about this, what are the challenges they are facing. So this, our Indian banking, it is not, like the other countries where it is all well settled, well clear things, but you can see the recent timing, there are many policy changes. So when the economy is improving, definitely the policy will also should improve. And the bankers are the one of the people, they have to also facilitate. In that way, you could see a lot of bank changes during the last few years, and ultimately it is going to be benefit this, but you have to bear this brunt. So how to give the best services to the stakeholders, to the customers. So when we see this, still our if you see the all over the world, India is the country, IT industry, it gives all over the world the technologies, the best technologies. Every country they go, and then even banking, if you see any country in European countries also, if you go to any banks, one of our Indian will be sitting there to give the IT services there. But unfortunately, we are not able to still stop the many fraud cases. It technically also it is very challenging for us. So this is when you see this, banking. So banking fraud is the one of the major challenges for us. So India is since our population is very high, so the challenges also will be more. So if we can run a best bank in India, we can run anywhere in the world. That is the challenge today we have. So I thought I will share this. So we have to think on those, how to curb this. So if we see the data, so RBI reported more than 9,103 fraud cases in 2022. So it is very high, because how much money is involved, all those things, I don't have data, but so this is, we have to curb this, we have to reduce this. Then the second challenge for you for the students in front of you is how to take these bank services to the underserved people. So more than 69% population in our country, still they don't have the formal banking. So these are all, you have to play a vital role to take these banking services to the underserved also. And another major challenge for the banking technology people are, so how to increase the saving account deposits. Now keep on, it is decreases, and how to increase this. And also there is a pressure on net interest margin. So you borrow from the people, and you are also giving interest. Similar way, see, you have to also collect interest. So in this, there is always net interest margin you have to take. So how you should be clever enough to attract more investment, and also how to give the best interest rate, collect from your stakeholders. This is also one of the major challenge for you. And security to the customers, also a major change. And we cannot wash away your hands when our customer is in stress. So you cannot say we have done everything, so it is your fate, we can't do anything. So we cannot wash away like this. So you could have seen there are many cases like this is happening. So security to the customers who are coming to you. So this is also major change. Being a technologist, so you should also think on this. So how best we can give the security. Now you are having 2 stage, 3 stage like this. So without disturbing the comfortness, without disturbing the comfortness, how best we can give the security to the customers also. It is for you, in front of you. And what are the cyber security risk we have. All those things you have to think on those lines. And still the online banking is still a challenge for us. So we don't know whether we are online banking when we do. Is it safe? It is secure? Still there is a fraudulent homepage where it attracts us, and it is similar to the same bank, and because underserved people are more, so they do not know how safe these home pages are. So this should be also curbed. Automatically it should be curbed without disturbance of RBI intervention, all those things. Your technology should not allow this, correct? So these are some of the challenges you have. So in this type of meetings, you will be having a discussion on the industrial partners. So it is definitely going to be very useful industry interface meet. So I congratulate the department. I thank the department for inviting me this function. Thank you, Honorable.
We express our sincere thanks and gratitude to our Honorable Vice Chancellor, Professor K. Tharnikarasu, for his dynamic leadership and enriching inaugural address. Sir has been a strong support of our department's initiatives and activities always. Thank you, sir, for standing with us.
The Department of Banking Technology constantly interacts with the industry to enhance the students' output and employability skills, and introduces innovative interdisciplinary program as and when there is an industry demand. With the same spirit, taking advantage of the new Education Policy 2020, it brings out with a new disciplinary program, 5 years integrated BTech MBA, Computer Science and Business System with a specialization in Banking Technology, Financial Technology programs.
It is a proud moment for the department that integrated MBA program will be launched for the ensuing academic year 2024 to 2025. With great pleasure, we would like to invite the Honorable Vice Chancellor, Professor K. Tharnikarasu, to release the curriculum structure and the syllabus copy and request other dignitaries on the dais to receive. First exchange in India to implement electronic or screen-based trading will begins its operation in 1994. A pioneer in technology which ensures the reliability and performance of its system through a culture of innovation and investment in technology. It also plays a significant role in shaping Indian economy. We are sure our today's chief guest of the inaugural function, being the chief economist of such a great institution, contributes the growth of the capital market in India. Our chief guest of the day, Dr. Tirthankar Patnaik, holds 23 years of rich industrial experience in Indian capital market in the domains of macro and sector strategy, quantitative finance and consumer banking.
Dr. Patnaik started his career as a researcher at Indira Gandhi Institute of Development Research, Mumbai, where he did his PhD. He worked on a number of academics and corporate projects in the area of econometrics and quantitative finance, followed by a stint in consumer banking analytics as an analyst with the Global Consumer Group of Citibank in India and Europe. He is also the chief strategist and head of the research for India at Japan-based Mizuho Bank.
It is a proud privilege to have him as our chief guest of the day. Let us invite Dr. Tirthankar Patnaik to deliver the chief guest address.
Good morning. Ellorukkum vanakkam. Respected professors, Tharnikarasu, Professors Malvika Dev, Professor Mariappan, Dr. Joseph Amalan, other dignitaries on the dais, Professor Samantray, and everybody else here, students. It's my pride pleasure to deliver the chief guest address at Bancquest 2024. at Pondicherry University's Department of Banking Technology. It's been 20 years since I came to Pondicherry, and it really feels nice to be here. I will speak about technology in my address a little bit. I have a detailed presentation later at 12 o'clock wherein we will have a full presentation. But today I wanted to speak a little bit about some of the topics that came to my mind while we were going through the conference this morning. So all of us use technology, practically all of us. Madam Dev spoke about how technology is important for us, how a student of banking technology needs to be adept with practices in technology that are needed by the market. Professor Tarnik also spoke about how technology needs to be used by the rest of the population in the country, and how if towards the end of his address spoke about if people do not understand technology well, then fraud detection also becomes a serious problem for our banking sector. So I will speak a little bit about markets here, the other part of technology for our Indian economy. Banking is what you will speak and hear for over 2 days, today and tomorrow. So my idea is to give you a small idea about securities markets today. So all of us, as our presenters said, have heard about the stock market. You guys track about Nifty. I believe many of you will have trading accounts as well. It's also possible. Yes, savings is a good idea. Starting at young age is a good idea. So first of all, quick question: how many here have trading accounts? Very good, very good. I mean, this share is higher than many other audiences that I see, and I'm very proud, and my compliments to the faculty and university also. Very good. The idea as an economist, I'm trained as an economist, so the idea that I see of people getting into stock markets is of households moving their savings or adding their savings to non-fixed income based assets. Typically Indian households save their savings in the form of gold jewelry is very important for us. Other than that, they also save it as cash. But in financial savings, the vast majority of our household savings goes towards fixed deposits. Our banking system is big, and there is no wonder that the overall banking system in the country today is about 200 lakh crores, 200 trillion rupees. This is the size of the banking sector. We have nearly 200 banks. We have nearly 10,000 non-banking financial companies. So it's a very big banking sector. I'll just give you some idea about the securities markets today. So today, students, we have about 9 crore investors. Our population is 140 crores, the highest population across the world today. We are number 1, but we also have 9 crore investors, and we stand here in around May 24. April is ended, we are in May 2024. 5 years back, in 2019, the number of investors in this country was about 2.7 crores. Just 2.7 crores. So I know all of you can easily work out the annualized growth rate in 5 years if a number becomes triple in 5 years. So from 2.7 we have gone to 9 crores. That is the speed at which investors have come into the markets. Okay, that's the speed. That is how households are coming in. In India today, I mentioned, we have 140 crore population. How many families, how many households in India? Our population studies say that the average household in India today has 4 members, father, mother and 2 children. And that translates to about 35 crore, roughly 35 crore households. And it might surprise people to understand here that nearly 20% of our households are somehow related to stock markets, either directly in the sense that they have accounts in stock markets, or indirectly in which they have accounts in mutual funds. Now, on this dais, I'm not about to profess any particular way into getting into the markets. No. Remember, the idea that we have in mind is how Indian households are accommodating parts of their savings in non-fixed income based assets. And why do they do it? Why do people get into such assets? To look for higher return, for a higher risk. All of you in your courses would have learnt about the risk return trade-off. So higher risk, higher returns. People do look at supplementing some part of their savings with higher return assets. So that's how the story of capital markets comes in India. And technology wise, since this is a banking technology conference, let me give you some other interesting numbers. So it was mentioned that NSE started trading in 1990s as an online exchange. Yes. So National Stock Exchange happens to be the very first exchange in the world that started only online. Exchanges have been around for a long time, students, hundreds of years actually, hundreds of years. In fact, the Bombay Stock Exchange that we have is the oldest exchange in Asia, and exchanges existed before that as well. The New York Stock Exchange has completed 200 years, and the Dutch Stock Exchange has been there for even longer. Some of you might have read or heard about the Dutch tulip mania, and that used to happen at stock exchanges hundreds of years back, 300-400 years back. So coming back to the present, in terms of technology today, exchanges are in a space where that beguiles the mind, frankly beguiles the mind. I know we mentioned that we have 140 crore individuals. 9 crore of us have accounts in stock markets. 9 crore, just about 9 crore. What part of our country is covered by markets today? What part has at least some individual who is connected to the markets, at least by having a trading account or having an account at a mutual fund? So in India, across our 3.2 million square kilometers of area, we have over 700 districts across 29 states and union territories, Pondicherry one among them. Across these nearly 700 districts, we have about 19,250 pin codes, and all but 30 of them today have an investor. That gives us a penetration in India of about 99.8%. This is the extent of how deep markets are there in the country. Now, when we speak about depth, I know you will ask me, it is not about the spread, it's about depth. Let me try and give you depth. So today, the National Stock Exchange, in India, is the third largest exchange in the world in terms of number of trades. How many trades happen in a day? And if you count derivatives, options and futures, I'm sure all of you would have either already had courses in derivatives or would be going to learn derivatives. So in derivatives, India today ranks number 1 in the world. It was number 1 in 2023, 22, 21, 20 and 19. So last 5 years, we are the world's largest derivative marketplace as well. What trades the most in the world today? What? It's not crude oil. It's Nifty derivatives. Actually, no, Nifty is second. It's Bank Nifty derivatives. Bank Nifty is number 1. Nifty is number 2. And if I'm right, I'm not very sure about this, Mid Cap Nifty is number 3rd. So the most traded products in the world today are Indian products. For fully 45% of all financial transactions that happen in markets today happen at NSE in India today. Some more numbers for you. All of you would have heard about UPI. UPI allows us to make transactions faster than anywhere in the world. It is part of what our government has given us. It's called digital public infrastructure. It allows Indians to transact with each other at the fastest place, almost no cost basis, pretty much better than anywhere else in the world. No country has this. No country has this. So UPI does about 12 billion transactions every month. Maybe Dr. Joseph will correct me, 12 or 18, I think one of the two. About 12 or 18 billion transactions every month. Derivative exchanges today do about 16 billion messages every single day. So more of technology for you students. Exchanges are in a place where you have to really stretch your imagination to think about where technology is. One more for you. So everybody does Google search today. Absolutely everybody. Pretty much everybody does Google search. How many seconds are there in a day? 86,400 seconds. And across the world, Google search is the most used search. Despite the coming of generative AI, people still use Google search. So about 100,000 searches happen on Google every second. Now 86,400 by 100,000 gives you about 8.6 billion searches every second. And how long does it take to search? I mean, you search and the answer comes. So typical response time is about 0.1 seconds. I will just compare the same thing with an exchange. An exchange not just in India, maybe New York Stock Exchange as well, or NASDAQ or other exchanges that you would have heard of or not heard of, Shanghai, Shenzhen. These are very big exchanges. So at NSE, the number of messages that we get in a day are about 16 billion. On an average day, it's about 14 billion. 14 billion messages compared to Google's 8.6 billion messages. Google gets 8.6 billion messages in 24 hours. The exchanges get their 14 or 16 billion messages in 6.5 hours. Trading starts at 9:15, trading ends at 15:30, not 24 hours. What's the response time of Google? 0.1 seconds. The response time of 0.1 seconds in an exchange means the exchange is shut. It's not 0.1 seconds. It's not 0.01 seconds. It's not 0.001 seconds. It's typically 40 to 100 microseconds. Anything beyond that and people start complaining, oh, the exchange has become slow. Now, what is a microsecond, students? A microsecond is 1/1,000,000th of a second. 1000 milliseconds make a second, 1000 microseconds make a millisecond. At the exchange today, we measure time in nanoseconds, which is again 1,000th of a microsecond. So the data, let me come to data now. Obviously, what I'm saying this means that there is an enormous amount of data that is generated. Really enormous amounts of data. Again, back to technology. So I had research at NSE, and our team is just one of the many teams that looks at data. And since you are in the world of technology here, you are learning about technology, it makes sense for me to speak about a little bit of data as well. So we all hear about big data, we all hear about machine learning, deep learning, right, students? All right. So the cash market that you all see about, Nifty, it gets many trades, it gets many orders. Orders become trades. This is something that we all know. The number of orders that an exchange gets on a daily basis, NSE, is about 400 million. Remember, trading happens for 6.5 hours, 22,500 seconds. In each one of those 22,500 seconds, you get roughly 400 million orders, 440 crore orders. And this is not the big market. This is the small market. The big market is the derivative market that I spoke about, where we are number one in the world. There, the number of orders is, 14 billion. So 1,400 crore orders in 22,500 seconds. This means that the data that we get, on which we have to work, on which you will work if you work on market microstructure, is about 150-160 GB every day. Every day, every single day. Okay, again, small market. The big market, it's about 5 terabytes every single day. Now, how many of you work on your laptops that have disks beyond 1 terabyte? Anyone? I didn't think so. No, laptops don't come with disks beyond 1 terabyte. So imagine if we give you a day's worth of derivative data, what do you do? What kind of RAM is needed to work on this data? What kind of programming, as Professor Dev spoke about, is needed to work on this data? How do you work? As students, these are questions that must be interesting. Think about it. We had the same questions. I did my PhD 25 years back. At that time, the data was 1/100th of this size. 1/100th. And of course, the computers were 1/100th of its size as well. Our entire department of, just like this department, we had 70 PhD scholars and master students all together. We had a combined capacity of 1 gigabyte. That was the RAM on which we all used to work. I'm sure all of us have phones today that have more than 1 GB of RAM. But yeah, 1 GB of RAM is where I did my PhD. And during my master's students, we had computers with 640 kilobytes of RAM. 640 kilobytes. So coming from there, from masters to PhD was like dream. From 640 kilobytes, we went to 1 gigabyte. And today, 1 GB will not be enough, as you all know. So some of our machines have 1 terabyte of RAM. In fact, most of our machines have 1 terabyte of RAM. So technology has improved. Technology has become bigger. Technology sometimes doesn't even need you. Think about generative AI. You can write code. You can tell code. How many of you have not used ChatGPT? Yeah, I thought so. Yes, all of us have used generative AI. All of us know the enormous amounts of things that can be done with ChatGPT. And the only difference between people on the dais here, some of the faculty there, and you students is we are in the job market. See, that's the difference. So technology has implications. And generative AI is great. Everybody will tell you that. Generative AI is not fast yet. So answers from ChatGPT take half a second. That's very slow, as you know. Another revolution that is happening in technology today is quantum computing. Now, most of you may not have worked on quantum computing, yes, but you would have heard about quantum computing. So there is a proposed convergence or a conceived convergence of these two branches of technology. Quantum computing shaking hands with generative AI. Think of a computer that gives you answers like generative AI with the speed of a quantum computer. Why would they need people in the job market? What kind of skills will be needed in the job market? These are questions that keep us awake at night, of course. But for students, these are important. I'll come back to the markets. I'll come back to systems. I'll talk about India. You see, our country today, very interestingly, at a great place in the world. It is. We are the largest market in the world today, in many things. China was in this space, about 20 years back. Whatever you named it. I mean, pencils, pens, refrigerators, cycles, motorcycles, largest market in the world was China. 40 years back, pencils, pens, refrigerators, cars, trucks, US. Everything was US. In fact, some of the books that I used to read in the 80s would have rankings outside the USA because USA was so much above in everything. Last 20 years it was China. Coming in the 20s and 30s, it would be our country. Look at, nearly $4.5 trillion of GDP. All of us have learned about national income identity in economics. Y equal to C plus I plus G plus net X, right? So our consumption is about 60% of our GDP. And consumption is discretionary consumption and non-discretionary consumption. Non-discretionary consumption is food, shelter, clothing that you have to spend on. Discretionary consumption is what you spend beyond. In India, discretionary consumption today is about 40%, 35 to 40% of our consumption basket. Now do the calculation, students. Since you also don two hats, you're technology guys, you're also management guys. Think of a company or a country that generates $4 trillion annually. Okay, about 60% of it is consumption, $2.4 trillion. 40% of it is discretionary consumption, $960 billion. $960 billion is what Indians are spending every year on discretionary consumption. Food, travel, electronics, going out, so many things. And this is not enough. This consumption is growing today at 3%, yeah, not a very good news, but is expected to grow at, let's say, GDP rates. What is India's GDP rate? 7%. Think of 6% growth. Think of a market that's growing at 6% for the next decade, 2 decades. You will not get any comparable market in the world. Not China, not US, not the whole of EU, no one. So the only market in the world that will have discretionary consumption of this size and will grow at this rate is India. Now think of, a US company. You're sitting in Seattle, you're sitting in Chicago, New York. You don't see growth in the US. Yes, US is growing at 2.5%. US per capita income is $70,000. But everybody has everything already. To make a dent in those markets, you need serious money or serious technology. No wonder nearly 20% plus of the 25 trillion plus US market is only technology companies. We all know them. Meta, Alphabet, Nvidia and so forth. Where do you get your revenues? Where do you get your growth? That's why on CNBC, every corporate honcho says, India is great. India is where we want to come in. We are not the first. China had the same thing 20 years back. What's the difference? We are a more open market. We have rule of law. We are a democracy. You can take capital out of India as much as you want. It's not like China. So this is the opportunity that India provides not just to us. This is an opportunity that India provides to the world. And with that is your opportunity. With that is also your challenge. You will have students studying in Britain who will be your competition because they want to work in a growth market. Just like 25 years back, we went to the US to solve Y2K problems for the US, for US computers. Because 40 years before that, people simply didn't think that they need 4 digits to write their years. So Indians went in droves to the US and solved US problems. There is the world waiting to solve India's problems. And that is your competition, global competition. But that also means global opportunities. So these are the things, some of the things that I wanted to point out today about India's opportunity, India's leap in technology. India is giving in technology to its population that no other country has given. In history, when we talk about technology, when we talk about infrastructure, we look at what is called hard infrastructure. So we see tall buildings, big factories, number of cars. Yes, those things are happening in India. But India is excelling in what is called soft infrastructure. I spoke about UPI. UPI is only one. The ramifications of what is called India Stack are still to be understood. The ramifications of what India did with its India Stack was seen in CoWIN, the CoWIN app. You could get a corona vaccine anywhere in the US. You go to a supermarket, you go to a shop and you get a vaccine. But what if you have injected yourself twice? And never mind, they never did that because they had a lot of vaccine hesitancy. But India is the one country in the world which could provide vaccines to its people, counting how many people got what vaccines and at what intervals. I'm sure all of you, at least I do, have our corona certificates, which has the dates. And all of it is available on DigiLocker. And that DigiLocker has your Aadhaar card. It has your ration card. See, I studied many years back. But for you guys, it will have its mark sheets also. So that kind of a stack, a tech stack, no other country provides. And it's been given to you. So I have, colleagues, ex-colleagues who are in Visa, who are in MasterCard. And they think, ho gaya. UPI has killed our business. We don't know. Because the idea about networks, the improvement about networks is something that India has done. All of us are very happy about, transacting on Amazon. Have you heard about ONDC, Open Digital Connectivity, Open Credit Enablement Network? So these are some of the things that are being tried in the space of technology, specifically financial technology, that nowhere else in the world people have. So on that note, there is, on that extremely happy, heavy note, I want to stop. I want to speak a little bit about climate change as well. How can you speak these days and not speak about climate change? So simple, students, think of the opportunity. The world needs enormous amount of investments to get back to, at least 1 degree above 1850 levels. 1850, the kind of temperatures we had, today global temperatures are 1.2 degrees higher. We want to get back to lower levels because global warming causes problems. And the idea is called net zero. India has committed to net zero by 2070. But who will wait till 2070? I certainly won't be working till then. Should we leave it? No. This is an intertemporal problem. This is an intertemporal, intergenerational problem. How do you solve it? You do it before. Companies in 10 years, students will not be able to raise capital in the markets if they do not, or if they are not net zero compliant. India, by some estimates, would need about $10 trillion of investments. Now, what is $10 trillion? $10 trillion is about 2.5 times our annual GDP. Who will pay? The world will pay. Why will the world pay? They will pay for India's growth. They see the opportunity that I mentioned earlier. This capital will come to India. This capital will be opportunities for people working in that area, and together with technology will be how this problem will be solved. So what banks do is financial intermediation, right? Banks are financial intermediaries, is something that we hear. What we do is financial disintermediation. Markets are financial disintermediation. When you go to a market, you know the buyer, you know the seller. If you are the buyer, you know the seller. If you are the seller, you know the buyer. In a stock market, if you are the buyer, you do not know the seller. Absolutely do not know the seller. If you are the seller, you do not know the buyer. And yet, you trust. How? Why? That is the idea of innovation. That's the idea of security markets today, or exchange traded centralized markets today. Think about technology. What kind of technology solutions lead to a situation where the buyer does not know the seller? You can be in Pondicherry and buy a company that sells chappals in Delhi called Relaxo Footwear. You have not met the company, you've not even bought Relaxo Footwear ever, but you can buy Relaxo shares. Why? How? How do you know that the company will not cheat you? How do you know the seller? So these are many things. I will talk about it in detail. Thank you very much.
Thank you, sir. It's a lifetime opportunity to hear your thoughts, and this will surely be going to encourage us in the future events. Thank you, sir.
Distinguished guests, faculty members and students, we are honored to have with us Shri Joseph Abalan, Deputy General Manager, Reserve Bank of India, Regional Office, Chennai. His expertise and insights are truly remarkable. He has dedicated his life as a central banker in Reserve Bank of India with 23 years of enriching experience, of which 17 in the field of supervision of banks and financial institutions.
Sir is veteran in carrying out supervisory review and evaluation process. He completed his master's in operational research from National Institute of Technology, Tiruchirappalli, and is a certified associate of Indian Institute of Banking and Finance.
Throughout his career, our guest has demonstrated exemplary leadership, innovation, and dedication to his work at different roles in Reserve Bank of India. So without further delay, please join me in extending a warm welcome to Shri Joseph Amlanji with a request to deliver the keynote address.
A very good afternoon to all of you. Sir, it took some time to process all your data. So that's what I'm just, very nice presentation, sir. So thank you very much. I chose to talk about the contemporary developments in the finance and the banking and the fintech. So when I heard about this banking technology, your course, we thought of, I would just want to tell, before 2010, if you tell a banker a technology, for a banker a technology means before 2010 it is his own computer. Anything he do, posting a ledger, for him it's a technology. RBI came out with the core banking solution after 2010. Then the financial technology have picked up, and the two major insurance, which is one is the demonetization and the COVID, which has further increased the technology. And this course, when I heard about this, it's a beautiful combination of banking, technology and finance. Definitely, when we joined the bank, central bank and all, we are looking for something somebody can teach us the basics of the banking, where they can also talk about the technology. So we really have to start from the scratch, where to understand, we have to do our own studies. So this course, I think really it will be, I can see that curriculum also, it was very nicely and beautifully blended. And Madam was also telling about this out-of-box thinking. Really, I also, Madam, I just want to reiterate, because we are in the industry. So what is that out-of-box thinking? When it will happen, your fundamentals should be very strong. That's what you are doing in the college time. So make your fundamentals very strong, then your out-of-box thinking happens. Already sir was talking about the generative AI. So generative AI already entered every field. AI in education, AI in banking, AI in tourism, AI in entertainment industry. So when AI comes into the banking, what you and me going to do? So when AI take decisions on the monetary policy, can take some decisions on any other important decisions. So how we are going to put a challenge to the AI? So two things which differentiate us from the AI. One is definitely the innovative or the out-of-box thinking, then our cognitive critical thinking. These two things only which we can outsmart the artificial intelligence. That is what required in every field now, and not only in the finance and the banking. You take even the IPL, what is going on, see how the teams are trying out the new strategies, how the scores are now going up high. It's totally, they're coming out of an out-of-box thinking how to go about the strategies. So same thing, it is applicable to the finance sector also. So let us go into my topic. So I'll be touching upon some of the major developments only. So already it's running out of time, so I'll not be taking much of your time. Before going into some of the developments, first of all, I just want to tell about the roles and functions of the bank, because many times when we come across students and when we do interview on many of the students when they come to RBI, they don't have the functions knowledge of a central bank of a country. So what if you take the RBI as a central bank, whatever the decisions or whatever the functions RBI do, it's totally directly related to the economic development of the country, first of all. Second thing, our RBI is a unique bank. In what sense? It is one of the principal regulator in the financial industry. You would have heard about other regulators also. There are Insurance Regulatory Authority, there are other SEBIs there, then other NABARD, other authorities are there. But RBI will be a principal regulator. Why? Because RBI has been given the mandate to ensure the financial stability in the country. So when you want to ensure a financial stability, then RBI becomes a principal regulator. Second thing, the one unique about us, RBI is a full service central bank. If you read across central bank in various countries, many of the countries might not do certain functions. They might not issue currency, they might not be doing the payment and settlement systems. They might not be doing certain functions which RBI is doing. But here we start from the issue of currency management, the making of the monetary policy, forex management. RBI is managing the forex by intervening in the market. We also manage the volatility in the market, the regulation and the supervision of the entire banking system, and not only the banking system, the non-banking financial industry, that is also regulated and supervised by the RBI. Then RBI is a banker to the government and the debt manager of the government. So this kind of all the various functions when RBI do, it is considered as a full service central bank. So that's basically I just want to tell about that. And at this juncture, I also want to tell about, RBI came into operations in 1935, and April 1, 2024 entered the 90 years of completion, and Honorable Prime Minister graced that occasion. And during that time also, he spoke about many things. What going forward, what are the vision, what in the banking sector, what is that to be done, and what is the role an RBI has to do. That you would have seen in the speeches. Now, I'll be touching on the developments in the fintech. Fintech, that is, even though fintech was, from 2010, there are various technologies have come and gone. But I told you the two events which made progressive, they made the more financial inclusion, or those demonetization and the COVID situations, where the financial technology, usually fintech is an umbrella term, like any finances which uses their technology to furthering the business is a fintech. It might be in the banking sector, or it might be in an insurance sector, or any other sector. When it comes to the banking sector, fintech, it is totally regulated and regulated by the RBI, and there is a RBI development is we have a separate department for that fintech. The objective of the department is totally taking care of the fintech area. What are the framework it is happening in the fintech, and what are the innovations happening in the fintech. So that is the main objective of the department. Apart from that, RBI has come out with the innovation hub. There is a Reserve Bank innovation hub in Bengaluru. That innovation hub is separate. It is owned by the RBI, and the entire objective of the hub is to bring in more innovations and more products, to find out more products which satisfies or targeted toward the low income population. So that is the objective of the Reserve Bank Innovation Hub. These are some of the developments which are on the fintech. Apart from that, RBI come out with the guidelines on the digital lending. So what right now we are various digital lending happening. You would have studied about the digital lending, P2P, all the various segments are there in the digital lending. So RBI is coming separately. A framework has been given on the digital lending. So to take care of, to given a framework about the digital lending. So this is another development which I want to say. Apart from that, RBI is one central bank which is unique to have its own regulatory sandbox. So you would have heard about a sandbox. A regulatory sandbox is basically when any product or service, if you want to introduce in the market, it has its implications. It might be having the legal implication, it might be prone to frauds. So to ensure that that doesn't happen, so it will be in a controlled environment. These product or services will be tested using the stakeholders of the system. So most of the central banks, they don't do that. Being RBI they do for this kind of, and it was done through the various cohorts. So there are 5 cohorts already completed, starting with the retail payment system, on cross-border transactions, MSME, on various areas this cohort has been tested, and we have come out with many products also after the testing of the regulatory sandbox. This is one development. And apart from that, RBI also handling the interoperable regulatory sandbox. Like for example, any product, it might be coming under RBI also, it might be coming under SEBI, or it might be coming under any other regulator. So in that case, that product should have 2 or 3 regulators will be handling that. So in that case, there is an interoperable regulatory sandbox is also. So what a RegTech, it's nothing but a platform, which what is happening, that platform will provide you for many of the regulated entities, where RBI will be managing many of the entities. Not only RBI, any other regulator which have their entities regulated, they can put their compliance. They can submit all the requisite from the regulator through the regulatory technology. So this is some of the things which I could see, that the comprehensive compliance like KYC, AML, all these things are done through the RegTech. So if you come to the SupTech, it is a supervisory technology. There also a lot of platforms have come, where as a regulator, when we go to the regulated entity, so how the regulated entity can do their compliance. Even recently you have come out, you have seen in the paper a lot of compliance issue happening from the many of the banks, and RBI have come out with penalties. You will be seeing in the papers, RBI have come out with this penalty because of this particular bank, this has happened, this has happened. Hope you should be reading the newspapers also, because that is, if you come to this area, finance and technology, this is a very happening and it is very dynamic. So the news also matters a lot. As a students, even though you will be more concentrating on your basics, but still the current affairs will give you a lot of information. So this is, you would have seen RBI is coming out, in the non-compliance issue, coming on various violation in the KYC, AML, you would have studied about the KYC, AML, where the violations are happening. So this kind of platforms really helps to give the compliance, right? So coming to the other developments regarding the institutional arrangements, not only on the operational side, as a central bank, RBI also creating a lot of institutions. So what kind of institution? We also need research, we also need some kind of cyber security shielding is required. So what are the institutes RBI, such as, like I could see that Institute for Development and Research in Banking Technology, it is in Hyderabad. So IDRBT, this is again all the R&Ds will happen there. And one more is the Indian Financial Technology and Allied Resource Services, which is the IFTAS. This is basically to deploy and provide essential IT services for the bank and the RBI. And also there is a company called the REBIT, Reserve Bank Information Technology Private Limited, where all the cyber related risk and the cyber related security measures related to the banks and the RBI will be taken care. And NPCI, the National Payment Corporation, that is you'll be knowing. And I talked about the Reserve Bank Innovation Hub. These are the various institutes which is promoted by the RBI. These are the developments. And coming to the payment settlement system, one unique, everybody will be a part of that tool, which I can say that NEFT and the RTGS, it is operated by the RBI and it is managed by the RBI. This is one unique settlement system where across the world, none of the central banks will be doing for 24/7 and 365, which itself will push the payment settlement to a new level. You cannot see that it cannot happen at 24/7 and 365. So these two are the achievements which has happened at the NEFT and the RTGS level. And sir was also telling the UPI. UPI is just revolutionized everything. It is just, we made a huge jump in the digital payments because of the UPI. UPI is such a platform it created. So the number of services and the way it gelled the stakeholders, it's and you would have heard about some of the products, UPI Lite, 123 Pay. There are a lot of UPI products catering to the various segments, people who are not using smartphones, or people who are not having a network. So for various type of segments, the UPI have come out with various products. That is one development. And I'll be talking about, the last but not least, about the CBDC, the central bank digital currency. As my previous speaker was telling, RBI have really taken a very bold step in that direction. Yes, CBDC, it's a legal currency in the digital form. It is exchangeable, interoperable. Why CBDC? There are 3-4 reasons RBI have come out. One is basically to cut cost for the physical movement of the cash. You know how much it costs you for printing and transporting the currency to the every parts of the country, so cut cost, and also to ensure that the digital part of the thing has been promoted, and also cut short. There are cryptocurrencies and other kind of currencies are coming to cut short those kind of private currencies also. RBI have come out with their own currency, which is CBDC. It was done in a pilot project. It is going on. So it is divided into two types, which is CBDC retail and CBDC wholesale. See, usually for retail, it is you and me which we doing the transactions. It is between the peer-to-peer and also to the merchants. But in the wholesale, we will not be involved. But that is for the secondary market, where secondary market settlements are happen through between the banks through the CBDC wholesale. So this is what the developments happening in the CBDC. Coming to the climate risk, what sir was already mentioning about the climate risk. Definitely, it is going to be a future big risk, which is going to, like, earlier we used to target all the credit risk, market risk, and operational risk. Now the climate risk, it's going to impact in all the areas. It might be an operational risk, it might come as a market risk. So this climate risk, RBI also recognized that climate risk. It has come out with a framework for how a green finance has to be done. There is a green finance. What is a green finance? Basically, financing for any climate risk, any project which is encompassing the climate part of it. So also the framework on the climate risk has been released by the RBI. So that is in the future, that is also been taken care, where any climate risk related which is impacting the banking and the finance. So, and the last one, which with that I'll close it. So what challenges then we have? So that our theme is going for developed India in 2047. So there are lot of things envisioned by the Prime Minister and other departments. So how to go about in the next decade? So what could be the challenges for a banking sector, and particularly for a central bank? First of all, the first challenge will be the regulation and the innovation. As we thought of talking about the out of box, definitely the industry also will try to maximize their innovation. Same time, the other side, regulation, it is kind of a both side of your hand. If putting high the regulation is an easy work. So just to put the tightening the norms, regulations is very easy for a central bank. But if the regulations are at a very high level, the innovations will be suffocated, and there will not be much innovations in the industry. Same time, if we are allowing it free to go for a very innovative market, again it might lead to a lot of fraud and the compliance issues. So the balancing of the regulation and the innovation will be a quite challenge for the central bank going ahead. And the other challenges could be the newer banking structure. Earlier our speakers also talking about the banking structure. You will be studying in your books, there will be when you start studying about a banking structure, immediately there will be a central bank comes, and there will be commercial banks here, public sector banks, and there will be a small finance banks, urban cooperative banks. But the entire structure might go for overall because of this technology, the way it is coming in. So many of the banks, you would have heard about the neobanks. There is a concept called the neobanks. So the neobanks are picking up. That is again a subset of the fintech. Banks using a technology is a fintech, and if a bank itself coming in a full new technology, it is a neobank. So that concept is also picking up. Going forward, how the structure is going to be there for the banking industry? How the challenges what the banking industry going to face? So that is again a challenge for the central bank to think going ahead. And the other challenges, or in an industry, regular challenges are coming. One is the cyber security. Cyber security you heard about recently. You would have heard about lot of news where people being frauded, defrauding is happening. Cyber security is going to be a huge challenge for the banks. Now, if you compare an old public sector bank and a new bank which is newly got license and coming, there's a major difference between these two banks. Those banks which they started in a basic structure, then they taken the technology inside the banks. But the new age banks, they started in the new technology. Everything is technology inside the banks. So automatically, the more the percentage of technology, the more the cyber security risk are there. If the bank is not taking as a part of, seriously not as a risk in their regular risk, if they are not prioritizing the cyber security risk, definitely that is going to be a challenge for the banking industry. So these are the challenges which I could see that I am able to tell you. So thank you very much, sir. Thank you very much for the opportunity. Thank you.
Thank you, sir, for your valuable words of wisdom and insights. Your guidance and insights will definitely shape our career and future.
As we have come to the close of inaugural session of the event, it is my privilege to invite our beloved teacher and another coordinator of Bancquest 24 to express our gratitude to our esteemed guests for their invaluable contributions that made this event possible and successful.
Please join me in welcoming Professor Prabhu Sevagan to deliver the vote of thanks.
On behalf of Department of Banking Technology, I wish a very good morning to our Honorable Vice Chancellor, Professor Taranikarasu sir, our distinguished Chief Guest, Dr. Trithankar Patnaik, Chief Economist, NSE Mumbai, and our invited guest, Sri Joseph Amalan, Deputy General Manager, Reserve Bank of India, Chennai, our beloved Dean, Professor Malavika Dev, respected HOD, Professor V. Mariappan sir, fellow teachers and professors from other departments and officers from various banks. On this memorable occasion, once a great man said, feeling gratitude and not expressing it is like wrapping a present and not gifting it. I thank our invited guest, Sri Joseph Amalan sir, Deputy General Manager, Reserve Bank of India, who graced us with his presence. We are so delighted to have your presence, listening to your keynote address and understanding more about incredible work. It's really inspiring, sir. Thank you so much for your presence, sir. And event of this dimension cannot happen overnight. The wheels start rolling months in advance. We have been fortunate enough to be guided by our head, Professor V. Mariappan. My sincere thanks to him for his untiring support and guidance at all our times. Today, my words are not enough to express our gratitude to Professor Mariappan. His guidance that radiated a source of energy within us. We will ever remain grateful to you and we thank you, sir. I extend my sincere thanks to all our senior professors from Department of Banking Technology, from other departments who always stand with us and motivate us, the fellow teachers, non-teaching staffs and media persons, officers from various banks, and my dear student friends for their enormous cooperation in the organization of the Bancquest 2024. If time is memory, then today you have spent millions for us. Once again, thank you all for being present here and hope for the fruitful session in coming sessions. Thank you all.